But if you have $1 million, what are you going to do? Open 4 operating accounts? What if you have $10 million? You're going to open up 40 operating accounts at different banks? Like, no, that doesn't make sense. Oh boy, the banks are collapsing. The banks are collapsing. Now, do I freak out about what's going on? No, but I'm sure you've seen headlines. So I just want to give my perspective and just kind of talk out loud with you. And I'd love for you guys to interact with me in the comments, ask questions, give me what your thoughts are, what your ideas are with what's happening and how you think it affects everything we've got going on in the economy. And we'll go from there. But a few things really important to note is I think this is paramount for our trust in the banking system and kind of how we feel about that. I think the government has to look at how they choose to react, when and what they react to. I also kind of wonder, is this another win for cryptocurrencies and them saying, yeah, see this banking system, like we're not having to deal with all this. So those are some of the things that I'll kind of think about and go through this video. And obviously you don't live under a rock, so you already know about the SVB, Silicon Valley Bank. There's extreme turmoil happening in the banking industry currently. Now, in 2008, if you remember back then, we had a huge financial crisis. You had Bear Stearns, you had Lehman Brothers. Government had to pick and choose what it did, because if it didn't take decisive action and inject capital into the banking system, potentially our entire system was going to collapse. Now, obviously, things happened. Multiple banks closed. I think hundreds of banks over a period of a few years closed. But Bear Stearns got a bailout from the U.S. government, injected capital. Eventually, J.P. Morgan purchased that bank at an extreme discount. Lehman Brothers went out of business, so completely went bust, and then you have other banks that did the same thing, right? Rules were enacted, things went into place where banks could do certain things they could not do. So this will never happen again. Well, we're obviously in the situation right now, 2023. And if you've been reading along or watching videos, you probably know that it was okay until the inflation and interest rates began to rapidly rise. Well, the problem is they were making low interest on the instruments that they were invested in. So they had to sell at a loss in order to try to recoup this capital to get to the customers. You rinse and repeat that, and then all of a sudden you have a bank that's upside down, right? Like any business would be upside down if outgoing is greater than incoming and it's having to sell at losses in order to shore up its balance sheet and make things good and right. I mean, it's only Tuesday, March 14th, and just this past Friday was when the FDIC basically shut the doors of SVB, of the bank, and said, hey, look, you guys can't operate. And we were kind of left in limbo over the weekend. They had tried to find a buyer. They were unsuccessful. And when you say tried, I mean, we mean really quickly, tried to find a buyer. Didn't happen. So they had to close their doors. FDIC said, hey, we'll guarantee your deposits up to $250,000, right? Because that's what the FDIC does. The problem is that the businesses that were banking with this bank had millions of dollars, right? Huge accounts. And there was tons of talk online, people not feeling sorry for these businesses. Hey, you're supposed to do your due diligence. The other side making the argument of yeah, what kind of due diligence do you do with your bank? And if you're a business and you have even just $1 million, I say just $1 million, but if you have $1 million, what are you going to do? Open 4 operating accounts? What if you have $10 million? You're going to open up 40 operating accounts at different banks? Like, no, that doesn't make sense. You put your bank at a top 50 bank, which this bank was one of the top tier banks, top 50 in the US, and you put your money there and you go about your business and you do your business. But in this case, obviously, it was an issue. So over the weekend, we were left in limbo, oh my gosh, what's going to happen? That's when it got interesting, because countless business owners were wondering, well, could this be me? Could this be my bank? I bank at a regional bank. I don't bank at a top 10 bank. Could my bank just fail and everything that I have over $250,000 just disappears? These are the question marks. And so I think people that were banking with regional banks over the weekend were prepared to Monday morning, that was yesterday, to wire funds to different banks. And I kid you not. So on this one thread from just one thread in Twitter, Sweaty Startup, he was talking about that. The rule change was so guys like me didn't pull funds from 8 regional banks tomorrow morning, which was the plan at 9:01 a.m. And I was like, oh, that's interesting. And so I scrolled through the comments and I was surprised by how many. Here's one right here. Exactly right. I canceled the wires I had queued. Someone said, still planning to divest from 2 regional banks tomorrow morning at 9:01. Won't carry more than $250K in a single account, which is going to definitely hurt regional banks. And so that came because there was limbo. Now, the FDIC stepped up and said, here's what they said. They said, we will support, we will back all funds basically for the depositors, right? We'll back all the funds that were in the account. Now, what they did not do is they didn't protect the bondholders or the investors. So basically, the investors and ownership basically gets wiped out. The ownership gets wiped out, but the people, the customers, if you will be and are protected. But the question is, what signal does this send, right? The fact that there was a delay in that, the fact that, well, the FDIC didn't have to do that. I think there's still a large number of people who are saying, wait a minute, let's not do that. People are still, apparently, I got word that there's an influx from top banks of people trying to send cash into them. David Sachs from the All In podcast had a really interesting thread. I thought it was pretty interesting. And what he said is that, hey, the Fed may or may not realize it, but it's created a 2-tier banking system. So what are those 2 tiers? Tier 1, the systematically important banks. These are the too big to fail, the biggest banks. If you have money there, it's a true deposit. You can't lose it. It's not going anywhere. And he said tier 2 is everybody else. If you have money there, it's not a true deposit. It's an unsecured loan at that bank. You can lose it in a bank failure. Now, obviously, except for the $250K that currently is federally insured by the FDIC. But he said, now tell me, why would anyone use a tier 2? It's a great point. Like, why would anyone with more than $250K in deposits want to use a tier 2 bank if you thought that your bank could go out of business and you lose your money above that $250K? That's wild, right? So what are your concerns for the banking system? And do you think that this makes a case for cryptocurrencies? I'm curious to see where that goes, where that heads. And I think we're all affected, whether we have more than $250K or not, because when banks collapse, it affects the entire economy. Everything gets affected. You have lending that gets stretched out. Like, even as an affiliate marketer, I just got an email today from a vendor from Commission Junction. That's a large affiliate marketplace. They basically said, hey, we don't have a direct relationship, but we're in the process of evaluating any client relationships with those banks. So it's causing a shock, and it's causing customers to say, hey, what's going on here, right? And time will tell. Time will tell. And I'm sure in the next day, there's going to be a lot more updates. There's going to be more that comes out. Until then.